Hi folks, Scott here, and this is the wrap for Thursday, May 30th. So tomorrow is the last trading day of the month. It's May 31st. It's also a Friday. So our worksheet, which will be posted in about an hour or so on the website, will show you the historical results of fading gaps on the last trading day of the month under similar market conditions, which technically we closed below the 10-day moving average, a little bit surprisingly there, and above the 200. So that data will be included in the worksheet, but what won't be included will be what about the fact it's Friday and the last trading day of the month. So let me show you those results. And there you go, about 50-50 in terms of which way it's likely to gap on Fridays when they're their last trading day of the month. And it shows extremely high win rate in both directions, remarkably strong. Out of 28 trades, 25 winners. Doesn't get much better than that. Can't get much better than that. There have only been 3 times that you had a losing trade on the last trading day of the month when it was a Friday. Had you faded them all and of course been perfectly filled and not accounting for commissions or slippage and blah blah blah. But it's still obviously a pretty positive day historically, even though the sample size is a bit weak. You got to like these odds. Now, this assumes one uses an end of day stop, not something I use nor that I recommend. I will rerun these numbers for our members in the morning using our MTG stop parameters, and those parameters, which are equal to 30% of the 5-day average true range, can and do impact these win rates sometimes, as well as profitability. Sometimes profitability can go either way. Win rates can only go down, right, when you use an intraday stop versus an end of day stop. So I'll do that and confirm that these are still good, that this is still a good trade in both directions, as well as always deferring to our gap guides and my other research before I make my final decision. But I thought this is an interesting nugget to share. Hopefully bodes well for tomorrow. All right. Just a reminder, tomorrow is the last trade of the month, and our special offer on Gap Trader, my mechanical back testing open source system, is available. The special offer on that expires. Same with Range Trader. Tim and I will teach you how to use these applications. You can purchase either or both at a huge discount or a significant discount. And on top of it all, if you purchase by tomorrow, we add the custom code library, which we've gotten rave reviews on. See if I can find that right here, because it has about 120 different patterns already pre-loaded, pre-coded for you to save you time as it relates to special days, seasonality, market conditions, opening zones, gap patterns, candlesticks, Fibonacci's, pivots, Toby Crable patterns. It says Tony, I think it's actually Toby. Volume, other unique patterns as well. So we'll throw that in for you if you purchase one or either by tomorrow. So don't forget. And the reason we push these every 3 to 5 months is just a lot easier for us scheduling wise to get everything laid out in advance. So it's a lot better than talking about them all the time. And a lot of you are do-it-yourself kind of traders and prefer to have the tools and at your fingertips, or the data at your fingertips, or you just want to create your own automated systems across multiple markets. So that's why we make it available. Everyone is different. All right, let's see. Let's look at I'll show you the gap guides for the futures, because the worksheet here, the worksheet which summarizes them, was just a little bit neutral. You can't really tell because there's 2 zones in this opening area between the high and the close. This was the average of all 8 indices and their individual gap guides. So a neutral setup, but so you have to dig in a little bit deeper, or more deeply, and you'll see we opened most of the markets opened in the DOC zone, which is normally a decent zone, but neutral for the ES today. Neutral for the YM, slightly attractive. I'm looking for 60 and 1.3 here. So, Russell was the only one that was basically met my criteria. Looking at the ETFs, slightly attractive, slightly attractive. See how similar these numbers are? This is what you expect out of uncorrelated systems. Pretty remarkable when you think about it. I've got 3 completely different systems being averaged here for a weighted average, and these numbers, look how close they are on 10 years of data. It shows just how correlated these markets truly are most of the time. And then Russell, again, slightly better. So did not meet my criteria. Looking at the worksheet, there were no unique day factors in play here, none here. So there were some unique patterns, unfilled down gap from yesterday and the 10-day moving average down straddle. One favored gap fill, one was neutral. not enough to really push me off of my hands. See last night's video. Actually, that was a positive. I talked about this nugget last night after back-to-back unfilled gaps. Generally a positive. Next to last trade day of the month, a little bit problematic for up gaps, but overall neutral. So it wasn't a bad setup. It just wasn't a great setup. Now, had it opened higher, it would have been an even weaker setup. Ended up opening with tiny gaps across the board. So I just said, just no clear edge, no trade for me. That ended up being a very good decision. Let me show you why. I believe all the indices filled, but check out the ES. The bright white line is where we opened, 1648. It was 1.25 points of opportunity, and the low of the day, you probably can't even tell, the low of that wick was precisely 1646.75. See the low? It went to the tick. So whether or not you would have gotten filled is totally luck of the draw, and it seems like more times than not, if the price only goes to your target, if you're using a limit, you're not going to get filled. At least I don't. And that's probably a little bit of cognitive bias on my part, but I'm happy to not have traded it. That's the key takeaway here. 15-minute range guides came out, did not show a clear edge in either direction. That was good because there was confluence all around this 15-minute high, yesterday's highs, and so on. And when it powered through, I take that back. Some of the numbers, the S&P and the Dow favored the high fade, but it was not confirmed by the Russell and the Nasdaq. And I'm not going to trade these 15-minute guides when you've only got half the guides favoring a certain direction and a scenario where I said I would not trade an up gap today. Right? Why would I not trade an up gap today? Well, I just showed you. There were some bullish pressures in play that kept these numbers too neutral for me, meaning I'm always open-minded to possible bullish pressures if I'm not fading an up gap. And sure enough, it powered right through. And at that point, I told people in that big volume bar, I'd be looking by a pullback to this potential support. I set up a discretionary trade at 1653.25, which was 2 ticks above the green line, 2 ticks above yesterday's high. Allowed my stop. I was going to use a 4-point stop. Allowed me to go for +2 and +5 without breaking the highs and increase the chance of getting filled. Came down the first time. You probably can't see this. Missed me by a tick. Bounced more than 2 points. At that point, that was the first target I was trying to hit. I readjusted my target, not my entry price, thinking if we came back down, they would probably go a little bit deeper. I brought it down to 1552.25. And darn if it didn't stop right at 1652.75. Missed me by 2 ticks that time before it bounced. Again, ultimately hit all my targets, and I was a little frustrated to be honest, but that's called trading. Let's see. First hour guides came out. I don't really have time to show you those to you. They slightly favored the high breakout. I set it up only in the Russell because the ES did macro advanced studies, the research we have on our website, did not favor the high breakout for the ES. Did favor it for the Russell. Unfortunately, couldn't get anything going. I went long there. Closed out for minus 23 ticks today. Closed at the end of the day. Did not stop me out because I had a pretty decent sized stop. So I lost less than half of what I had planned. And it was a greatly reduced position size. So not a big deal. A little disappointing. But that was my day. It was my only trade of the day. I don't know when I got filled on at least. And there you go. That is the wrap for Thursday, May 30th.